What's up, everyone? Eric here again. Today is the 8th of January, 2021. This is an opening trade alert for Nike, ticker symbol NKE, and I sold the 135 put in the February cycle for $1.50. Let's have a quick rundown of the trade tab. I'm always trading in a 30 to 60 day window, and I avoid the weeklies here, so that puts me at the 42 day, which is February 19th, 2021. And technically on this system, the entry guidelines are at the 30 delta or under, which is over here. You have to add this delta column. However, for me personally, I usually end up more like at the 15 to 20 delta, and I go for this dashed line here, which is 1 standard deviation from the current price, and then this dashed line is 2 standard deviations. So I usually end up around the 15 delta, which is at the 1 standard deviation, and that's basically where I ended up here today. So I sold the 135 put here, and I collected $1.50 in premium, which right now it is exactly $1.50 as well. I'm going to lock that in just for example's sake. So I collect $1.50. That gives me an 81% pop, 90% P50, max profit of $150 because you collect 150, so that's your max profit times 100, which is 150. My max loss would be $13,000 if Nike decided to go to zero. In reality, my max loss is unknown or undefined, as the odds of Nike going to zero are basically nothing. And then my buying power effect is definitely in the mid to high range here at $1,800, almost $1,900 required buying power. And that is because selling a naked put is an undefined risk trade, which means your max profit is locked in, but your max loss and your buying power effect can and will fluctuate. If you want to define your risk because you don't want to use up that much buying power or you have a smaller account, you just need to purchase a protective wing farther out of the money on this put and turn it into a vertical put spread. So I do 5-point wide spreads. So I'd go up here and buy the 130 as protection. Currently that only gets me 64 cents. That's a little low for sure. I would probably bump it up to this. That moves me to the 31 delta, which is pretty high. I mean, that's technically kind of the cutoff for this system. You know, the guideline is 30 delta, this is at 31, so it's close enough. Nothing's written in stone. So technically this could work. You're at 31 delta here, the 19 there, and now this collects $1.18. Your pop falls to 71, 72%. P50 is 82%. Let's lock this in here at 120. This should say your max profit is $1.20, not $2.70. I'm not sure why this isn't updating. Again, looks like the max loss and the buying power are not updating either, but that's really easy to calculate. For this spread, it's 5 points wide or $500. I collect $1.20 here, so you just take 500 or $5 minus $1.20, and that would put your max loss at $3.80 or $380. That would also be the same for your buying power effect, would be $380. Let's take a look at the curve graph real quick here. All right, so the curve for the naked put is pretty easy and straightforward. I sold this naked put at 135. Ideally, I want it to stay above, and if it stays above there, at expiration, if it's above 135, I would realize my full profit of $150, which is what I sold it for. I sold it for $1.50 times 100 because you control 100 shares. That's 150 bucks. Right now the current stock price is way up here above 145. So at the moment I'm looking pretty good, but I guess time will tell. This also indicates right here, it says 81.9% here and here. So that's my current probability of profit. And here I switch to the vertical spread. So for the vertical spread, if I sell the 140 put and I buy the 135 as protection, it looks like this little window here is calculating properly. My max loss at expiration would be $383 based on the current price of 117. Let's move that back to $1.20 to keep the example consistent. So now the max loss at expiration would be $380, or actually for this vertical spread, that's your max loss period. This thing could go all the way to zero and your max loss would be $380. And then for your profit, if you move up here, your max profit would be $120 at expiration. And just like anytime you sell premium or you sell option contracts, what you sell the contract for is your max profit. So just like the naked put, your max profit is capped, but when you had the naked put, your max loss is unknown or undefined and could grow exponentially if you're not paying attention. So anyways, looking at the curves here, it's just a nice way to see how the naked put will perform versus a vertical spread here. And on this vertical spread here, you're right around 70% pop currently, where that naked put, you know, I was $5 farther out here, I sold the 135, where this is selling the 140. So when I sell the 135, I think that was giving like an 82% pop, where this is only giving about a 70% pop. So yeah, this curve is just a nice way to visually see how things stack up. All right, let's take a look at the chart for a quick rundown of the technical analysis. All right, so this vertical line is today where I'm opening the trade. I sold the 135 put, and for me to get paid, it needs to stay above 135. And if I want to get paid faster, I need the price to go up. But as long as it stays above 135, it can go up, it can go down, it can go sideways, and eventually time decay will pay me. I just don't want it to go below 135. That's when I would start to run into losses. As far as technical analysis, it's not a whole lot going on here. This yellow line here is an Elliott wave, and it is currently running up this last fifth wave here. Also, the blue line and the orange is the 20 and the 50-day moving average. And when you see them running kind of parallel to each other like they are right here, that's always a good sign. And especially kind of at this, 45-ish degree angle here, that's more of a healthy kind of increasing run up, right? And then more recently, just in the last couple days here, it gapped up about a week ago, and then it pushed back down here, and then it retested the 20-day moving average, and sure enough, it reclaimed it in the last 2 or 3 days here. And that again is another healthy sign that this trend will continue, at least for the short term. So that's pretty much it. Really, the RSI is pretty high here, and the MACD is starting to cross up again. But the thing is, the RSI especially can stay overbought for weeks on end. I mean, look right here, there's a section, and then right here again, that was like a whole week. And then recently it was high there. I mean, basically the RSI can just stay high for a long time. If this is a continuous uptrend, the RSI can just stay high and even be overbought for days and weeks on end. So when strong uptrends, the RSI isn't terribly helpful, and you could really say the same thing about the MACD. It's kind of the same thing. It's, it's above the zero line, which is good. That means it's in an uptrend technically. And here in the recent few weeks, it's kind of crossed down and then up and then down, and it looks like it's crossing up again here. So there's no real strong indicator on the MACD or the RSI, which that's fine. I mean, the reality is technical analysis can be wrong. So I always use this stuff with a huge grain of salt. And frankly, in my opinion, everyone else should too. Sometimes the technical analysis is right on the money, but in my opinion, it's basically a coin flip whether or not you can actually predict anything. Sure, the more indicators you can stack in your favor, the better. So if you have the MACD, the RSI, and the Elliott wave all looking good, great. I mean, that's a good thing to have, and the moving averages here. That's another good thing. But the reality is, in the grand scheme of things, all those technical indicators can mean nothing. This could drop off the face of the earth tomorrow, or it could skyrocket to the moon. And there'd be no way to know that a huge move up or down would be coming like that, right? So it's always funny. I always see these YouTube channels, and I follow quite a few of them. And they're all about their technical analysis. Every day they're releasing videos, which, hey, props to them. But the thing is, most of those guys have been predicting sell-offs for months now. And some of them are predicting large sell-offs as if we're going to have another COVID crash, right? And they're supposedly basing all this on technical indicators. And they've been wrong for, like 10 months now? I mean, maybe someday they'll be right. Probably they'll be right. I mean, the stock market never goes up forever. But in my opinion, the COVID crash kind of was the recession that everyone was thinking was going to happen. But it just happened very quickly, down and up. And now we're kind of back into the normal stock market uptrend. I forget exactly, but I think the stock market is normally in a bull market like 85% of the time or something. Something crazy high like that. So if you're a perma bear where you think it's going to go down, that's a tough world to live in. I mean, yeah, I can see the excitement because you're kind of contrary to the overall uptrend average. So it's fun to predict it and be right, quote unquote, right? But I've been following all these YouTubers, and some are better than others, but a lot of them have been predicting these moves down. Back here when this was happening, everyone was freaking out like, oh, this is the second crash. This is a dead cat bounce from here. They were saying that here and here. And then we got up here, and I'm sure people were saying that thing too. Oh, this is the top. This is going to be a big crash we've been waiting for. And sure enough, I mean, it's sold off like 10% or something, and now we're way above it. You know, it's like, I don't know. The perma bears, they got a tough row to hoe, that's for sure. Anyways, one final thing here. I've mentioned in the past that I use a site called tipranks.com, and I usually take a quick look there. And I think TipRanks is predicting this as a strong buy, and that it's going to end up somewhere in the 150 or 160 range up here, just like this Elliott wave is. And so yeah, so the next 12 months supposedly for Nike are looking good according to analysts and tipranks.com. All right, I think that's it. I always ramble on way longer than I think I'm going to in these technical analysis things, because in my head I can do all this stuff in like a minute. I do this every day, and then once I start talking, apparently I can't shut up. So anyways, I feel like I've talked this one to death. As usual, I'll keep you posted. Until next time, trade small, trade often, and I will see you in the next video.